Testing, testing. Hey, everybody. Welcome to the Morning Market Briefing. It's Friday, January 9th, 2026. We got Tom Russell here, Ben Nye in the house, and a very special guest, former intern, longtime podcast fan, probably our most frequent recurring guest, Thomas Klecker. And right now, Thomas, there are many people watching the live stream on YouTube with one simple question, and that is, may I meet you? How we doing?
We're doing good. Excited to be here. Excited to make the full pivot from first super user to intern to first full circle employee here.
I mean, it's big time.
A lot of people are wondering, how did the boys manage to educate a child from Minnesota without getting a government handout?
It's a great question. It's a pretty remarkable story in this day and age that we reached the youth of Minnesota, and we didn't get paid for it.
Yeah, this is actually going to end up being a net cost now that you're going to be an actual employee.
Yeah, this is brutal.
The only podcast that loses money on the internet. You heard it here first.
But Thomas, graduate of Utah now. How's it feel?
Feels good. Feels good to be off the hook from classes and ready to get started in the working world.
Yeah, what's the start date? April 1 maybe?
April 1, last week of March, something like that.
Yeah, we're excited to have him. He's going to get a couple more ski days in before he makes the trek full time, but he's in town checking out apartments, all that good stuff. Glad to have you, man. Fun day today too for the call. Where do we want to start? We want to start with the jobs. Let's start with the jobs number.
And we got to look at the October revision on this one too.
Oh boy, buckle up.
So I'll hit you with Tom, do you want to hit the numbers or do you want me to?
You go.
Okay, so the estimate was that we would create 60,000 jobs in the month of December. We were 50,000, so a little bit lower than expected, but kind of along the same lines. November was revised down slightly to 56 from 64. October was revised down from a loss of 105 to a loss of 173. So any of the jobs that were created in November, December were
washed out
and then some by what happened in October. So, and I was having conversations about this morning. Companies are doing layoffs. They're not hiring because they don't need to, and they can do more with less. And I was talking to another guy and we'll talk about this on Monday when it gets announced. But there's a large financial institution that's going to have a big layoff coming on Monday. And we don't know exactly how much, but then JP Morgan's going to follow, Goldman's going to follow. They're all going to start doing it. But this one's a big one. So
how lucky do you feel, Thomas? I mean, we're sitting here as a major player in the financial services space, and we're saying, you know what, we got to have them.
Yeah. I mean, I must have just squeezed in right in time.
Yeah,
before AI takes over.
We actually want to do less with more people. That's really our emphasis right now. So, welcome, Tom. Jobs reaction.
I mean, I think it's interesting. I was just looking through some of the numbers. Healthcare, construction, strong. Federal government, not so strong.
No.
Which I think continues to be part of the narrative here. I think even though the numbers are not stellar, I think the productivity is through the roof, and I think that a lot of that is the fact that the number of people working in government is cratering.
And if you have a job, it's good because you are becoming more productive. Average hourly earnings were up 3.8%. That's a big acceleration from last month, which was 3.5%. So it's this K-shaped economy that we've talked about is accelerating. If you have a job and you're productive and you are a valued member of the company, you're going to get paid more. But if you're not only you're not going to get paid more, you're not going to have a job.
And I mean, we've talked about it a million times, but the government is just a big wet blanket on everything. You know, they absorb so much in terms of natural resources and just pure economic value out of the GDP, out of the government, out of the economy as a whole. There's no point to having just hundreds of millions of people employed by the government. The fewer the better. We got to continue to do this. And while the jobs numbers don't blow everybody's socks off, we're actually hiring real people to do real jobs. I mean, you know, retail trade up, professional business services up, non-farm payrolls private up,
podcasters up.
And then, you've got healthcare, which is, arguably quasi-government, but construction up, federal government down. I think that's net positive. I mean, people are getting hired. If they are getting hired to do real work, they're not getting hired to be a bureaucrats. And I think I think we've very quietly become just a massive bureaucracy, and I think that this is a net positive from an economic standpoint. And I think that the new Atlanta Fed GDP number is going to indicate that quite a bit.
That's where I want to go next. We talked about this, and we teased this, specifically the impact of net exports that might have on GDP. We got the update from the Atlanta Fed yesterday on GDP now. We were at a 2.7% figure just a couple days ago on their projection. We're now at 5.4%. Now, this is a projection, but GDP with a 5 handle is going to be really do some positive work for the Andrew Hall America's Hot Index. I mean, that is a hot number.
That's the hottest number I can remember in a long time.
Crazy.
Outside of coming off of the economy is going down 30% in March of 2020, and it's interesting because we saw the number come through yesterday. I saw it was the trade balance was so wide from the estimate that I had to make note of it on the call. I did not realize that was the lowest gap in trade we've had since 2009, which is insane. I mean, and it was, basically half of the estimate. We're cruising. If we do the same delta next month, we could actually be very close to even on trade or even positive. And if that happens, I don't know what happens to GDP, but it's definitely going to have a much higher handle than a 5.
And specifically, the contribution on GDP Now's forecast of net exports, we moved from a 0.3% drag to a positive 1.97 percentage points.
That's massive. And that's 2.3% swing from that one number. Now, that's an October number, and a lot of it was blamed. You got the naysayers out. Okay, so the other
haters
side,
and losers, of which there are many.
They will say that this was because we had very few pharmaceutical imports, and we had a lot of gold exports in the month of October, which was when this trade balance number was out. And they said that this is probably not going to repeat. But I don't know if that's the case. Maybe the gold side, but pharmaceuticals, I think that that's part of the plan, is to produce more pharmaceuticals locally so that we don't import as much. And if that's impacting the trade balance as much as it is,
sorry about it.
Yeah, I mean, I don't know if you heard, but this administration just took out a president who was exporting pharmaceuticals to our country.
That's true.
So I don't think they want that.
It's incredibly impressive. And what it does is, so this is on a quarter-over-quarter seasonally adjusted basis. So what they do is they compare Q4 to Q3, and they basically multiply it by 4. And so that gives you your 5.4. What happened last year in 2025 is we went from like negative 0.8 to plus 2 point something to plus 4.3 to now plus 5.4. So what that does for year-over-year numbers is that it means year over year went from 2 to 2.1 to 2.3 and now probably like 2.5. And what it does for 2026 is that means in the first half of 26 will probably be around 4% year over year in Q1 and Q2. And the reason that's important is because that's how companies report earnings. They report earnings on a year over year basis. And so if you're seeing really fast growth in Q1 and Q2 for the overall economy,
then some companies must be participating.
Exactly. And so I would expect fairly strong results in the Q1 and Q2 on the corporate side.
The Cleveland Fed has inflation pointing to 2.2% in January, seeing it continue to come down with oil prices and lower shelter component coming in there. We will hear from our favorite University of Michigan Sentiment Index later today. What are they going to print? 4.1 on inflation?
That's the expectation, down from 4.2. So, again, the expectations are roughly double what is actually in reality. So, man, University of Michigan, the worst institution. Go.
I was asked this question earlier today, Tom, and it's twofold. Number one,
how much earlier, Ben?
Yeah, I do. I want to pause. Let's camp out there
to?
for a minute. It's currently 8:40 in the morning and Ben has already been having discussions with other people and getting questions about the economy. So just
Yeah.
I have not been asked anything earlier today.
No.
But I'll just let that stand.
Are markets pricing in tariffs going away, the IEEPA tariffs going away,
IEEPA.
and B, a new Fed chair? Are they pricing that in?
I mean, there was a rumor that the Fed chair had been selected yesterday afternoon. Now, I saw a headline this morning saying that Trump is going to make that selection now after talking to Rick Reeder from BlackRock. So I don't know that they're pricing it in because there seems to be quite a bit of volatility around who it is actually going to be.
And the market's only assuming 2 rate cuts, which
And-
it seems to me like if Kevin Hassett comes in, your base case can't be 2 rate cuts.
I don't know. The thing is, my crystal ball on how many rate cuts are going to happen in 26 is pretty murky right now because I just don't know what the move is in this scenario. We're going to have, call it 5.5% GDP growth.
5%
We're going to have
GDP
2%,
growth, and we're going to cut rates.
2% inflation. I don't believe that cutting rates impacts duration or inflation. I think that if you want to really supercharge this economy, cutting rates will increase the velocity of money, which is how, people making transactions because the cost of money will be lower. But I think in a scenario like this, when growth is 5, being able to get 3.5% on a money market is actually
Pretty good.
probably where you want to be. And you're about 100 basis points over where inflation seems to be settling. And we'll talk about the QE 3, 4. I'm not sure what we'd label this mortgage buying situation we're going to talk about that Trump is enacting. But I mean, you're moving from restrictive to not so restrictive. And I don't know that we need more velocity of money at present.
With GDP in the 5s.
Yeah, and then you say, well, what if they drop tariffs and now the tariffs go away? Well, maybe that actually is a scenario where the long end gets pushed up further, the short end comes down because you need to cut rates because now you're not bringing in the revenue and you need to reduce the cost of borrowing for the country. But there's so many different moving parts right now that I would say I don't know what's going to happen with rate cuts, which is not a great answer, but I think that the 2 is probably pretty certain. I think we get 2. That's predicted now. But if you told me we only got 2 at the end of 26 because the economy is running insanely hot and mortgage rates came down because there was some outside manipulation there and inflation came down on its own, then I wouldn't be surprised. And if you see inflation kind of stick because now we're starting to get good economic growth and things are starting to reallocate from a demand standpoint, I mean, it could go either way. My worry is the housing market. We'll talk about that. I think you're a little more bullish on it than I am, but there's a lot of moving parts right now that I don't know what the positive and negative externalities are going to be at this present moment, and I think we need to digest a lot of what's happening before we can really make a strong call.
We will get news on tariffs today. Right now, earlier this morning, Kalshi had the odds of the Supreme Court ruling in favor of Trump's tariffs at 25%. They've climbed up to 29%. So a little bit of move there. Not a lot of volume going on this. So I don't think you should necessarily read into that. But I do agree, Ben, with your assessment and your notes. I don't think this is going to be the real clear black and white, cut and dry answer that a lot of people think it is, if for no other reason than if there's a ruling against the tariffs, we're going to find other ways to attack some of these things.
Yeah, and I think a lot of people have questions about the refunds. Is the administration going to have to refund money that was previously collected? And I think this is a very practical Supreme Court that errs on the side of, hey, let's not
Let's let
go
it lie.
crazy. I think they'll probably figure out a way to justify not giving refunds for previously collected tariffs. There will be lawsuits, I'm sure, but I think those will just be drag on and ultimately die.
Of the magic dragon.
Do we think how should the market respond if these things are pulled back?
Well, it's a question, right? I mean, I think that if headline is tariffs are gone, inflation therefore is lower, and I mean, right now goods inflation is higher than it was pre-tariffs. If goods inflation goes back to where it was pre-tariffs, we're printing a 1 handle on inflation. and it's going lower because shelter inflation is coming down. Fed has every reason to cut rates in that scenario. Will it go down? I don't know, because you have the uncertainty coming through. And to Tom's point, now you're in a $200 billion inferior deficit position.
But the question is, do they? Because if inflation is coming down and GDP is cruising, like, why?
Let's get a hike.
Why fire your bullets if you don't have to? Like, give yourself that. Like, if things start to falter, then we got 350 basis points instead of putting ourselves at 200. And then if things go sour, we have less dry powder to do anything. I mean, I don't necessarily think that what the Fed needs to do as much as they needed to previously, because the three-legged stool, Scott Bessen's favorite three-legged stool. I mean, we've got the deregulation coming. We've got inflation going down. I mean, the whole point was he wants to create an economy where we have high growth, low inflation. That's happened, and it hasn't really had a lot to do with the Fed. And so, I mean, we're in uncharted waters. We've got, a trade deficit that's very suddenly, much smaller than it was. We've got revenue coming in
Federal
everywhere.
deficit that's much smaller than it was.
I mean, and we're making profits on things that previously government would not be doing. And is that free market? Is it interventionist? Is it? I mean, I don't really know how to attack it. I mean, we still haven't gotten to the GSE stuff, but we're probably going to make money on Venezuela. We definitely made money on Argentina. We're making money on the tariffs. We're making money on Intel and MP Materials. I mean, we're doing all these things that are profitable, whereas you look back to QE1, QE2, those were not profitable. In fact, the Fed continues to lose money on bond purchases in the past. The scenario is flipped now, where now if you start buying mortgages, which is we're going to talk about, the government is about to stump.
Yeah, let's just go to that now.
So announced yesterday, they're expanding the bond purchases at the GSEs, meaning Ginnie, Freddie, and Fannie Mae. And it's interesting because I think this might actually put a bullet in they're going to privatize these again, because the powers the government has over these government-sponsored entities, which are basically the aggregators of mortgage-backed securities, is that they can basically say, hey, we can buy more, because there are no natural buyers right now, fewer than there were before of mortgage-backed securities outside of us. Obviously, we own plenty.
The boys are in.
And they've been very profitable for clients. But, they're basically saying, hey, we're going to authorize Ginnie Mae to buy another $200 billion in mortgages, which is what the Fed was doing. That's quantitative easing, is they were buying mortgages on the open market. So now the GSEs are doing it, and rather than rolling them out as new securities, they're going to hold them internally. But the spreads are very wide. Their borrowing costs are lower because the federal funds rate is lower than the mortgage rate. Even the 10-year Treasury is significantly lower than where you would buy mortgages. And so that's a profitable trade. We're making those trades. We're decreasing the amount of money we have in client accounts that are in treasuries, which we're yielding 4 and are now yielding sub 4, or we're yielding 5 and now are sub 4 on the short end. And we've rotated out longer duration, higher spread. Well, where is that in the curve? That's mortgages. And that's a good trade. You're getting negative convexity, you're getting big income that's paid on a monthly basis, and you're getting continuous return of principal. When mortgages were in the toilet and you're printing money to do that, that's inflationary and blows up the balance sheet for the Fed. But if you're the government doing that, then that's a profitable venture. It's very small. I think that's something that I think is being misunderstood in this, is that QE1 was $500 billion. QE2 was $1.5 trillion in mortgages.
Yeah, $200 billion is a big number when you read it on a page.
It's like
but in context,
it's like 2.6% of the mortgage market, which is over $7 trillion. So it's not as big as people think. So I think the immediate effect will be people are going to overreact to this. Mortgage rates are already down 15 basis points. Will they stay there? Maybe. I think the net effect is you'll probably be somewhat lower, but not this low. But the hype train could get in a position where suddenly, that energizes mortgage originators. People start demanding mortgages because they think, oh, this is a good opportunity. And then you could see it become a self-fulfilling prophecy where there's a little bit of a spark, and now people are going to start competing in that space and bring those mortgage rates down and the spreads down. Is $200 billion enough to do it? I don't know. But this is what they need to be doing. If you could do this, and the powers they have for the GSEs, one of them was that they attached the assumability of mortgages, which is I can buy your house, and if I do just an absolute mountain of paperwork, I can take your mortgage and have it. If they can use the same powers they have to do the additional bond purchases and to have added the assumability, which is specifically Ginnie Mae's, you could then say, hey, I'm the president, here's the order. Ginnie Mae can now do portable mortgages. And I think if they do that, which they've talked about and we've talked about, it would be an absolute growth nuclear bomb for this country.
In a good way.
But I think that is $200 billion going to move the needle? Yes, at first people are going to overreact to it today. It's going to have to be a catalyst if it's going to have a long-term effect, I think.
It's like an accelerated share repurchase that a company would do.
Yeah.
It's, you announce the share repurchase, you buy a ton on the open market that is accelerated in the short term. And yes, you dominate the trading right now and push the price. But over the longer term, I would agree with you.
Yeah, I mean, like we're 12-year-olds, we're playing with fire. We've just thrown a bunch of pine straw on the fire. One of two things can happen. One, the pine straw is going to catch fire, and then 3 minutes later, the fire is going to be exactly where it was, or some of those wet logs are going to catch. And the question is, how are the vibes going to be absorbed by the market? And it's hard to know. The market hasn't even opened after this announcement yet, so we'll see what happens. But I'm cautiously optimistic. But I think that they should use the same powers to do the portability, and then we would be just absolutely cooking with gas and not pine straw.
Man, pine straw fire though, great illustration.
Everybody knows.
Everybody's been there.
I don't know. Do you guys have pine straw in Minneapolis?
Well, I'm not from it. Don't associate me with the general Minneapolis.
Yeah,
there's a big
Yeah. He's from Utah.
dividing
Yeah.
line.
I don't know
from
what kind of
Utah.
trees they have in flyover states, but I know we have a lot of pine trees here. I don't know that they're universal.
Yeah, we have a lot of pine trees, but I don't think any are in Minneapolis at all, really. It's all
Sad.
city
That's the
and-
problem.
Yeah,
That's the problem.
There's your problem right there.
Not enough pine trees. House passed legislation yesterday that would restore expired health insurance subsidies for 3 years. Really doesn't mean anything. He's got to get this through the Senate, but notably 17 Republicans did jump in with the Democrats to the bill. I think this is going to be viewed as a win for the Dems, and I think that's the correct assessment.
I completely agree. And I think it takes just another bogey out of play for the American people. People were concerned about tariffs. People were concerned about inflation, housing, and healthcare. And I think this takes healthcare potentially off the table. I think the Senate's going to come to some sort of compromise and get
They've
this
got
through.
to.
I think it's also a non-loss for the Republicans.
Mhm.
It would have been the nuclear option to roll off the subsidies. I mean, it was never going to work. I think the idea is they'll wait out Trump. I think there's actually, not to continue to dunk on young TK here, but I think there's a lot of fat that we've discovered that can be cut out of healthcare spending that we maybe didn't realize that isn't related to the healthcare subsidies. It might be related to widespread fraud across these United States that could really reel that in without having to hurt the people who are using ACA. And I think that that's something that if they do attack, will actually solve much of the problem without having to make people who are retired or not able to receive health insurance pay massive premiums.
I'd like to see that.
Mr. Brightside.
Yeah. Taiwan sent me up about 1%, showing some decent sales, but a bit of a deceleration coming into the close of the year, Ben.
Yeah, I was surprised that the market took this because I looked at the data first, and then I'm like, this isn't good. And then I looked at what the market was doing, and I think this is just kind of a litmus test of the market. I mean, Taiwan Semi, don't read too much into the December numbers because NVIDIA has just placed massive orders with them to supercharge AI sales. I do think that Apple may be slower after a really good initial reaction to their new iPhone. I think it's slowed down a little bit, and you can see that in the stock price. And I think that has an impact on Taiwan Semi, but overall, I think the company's doing fairly well. It's getting more difficult comparison periods. If you look at the year-over-year chart, this is about when in a couple of years ago, you're really starting to layer on a couple years of 40% growth, and that just becomes difficult to lap. So only 20% growth, still going gangbusters.
Geopolitically speaking, there's going to be a meeting with Machado from Venezuela next week. Greenland is not for sale, according to Greenland's representative that was in a meeting. The Iran situation continued. The social media, the videos, all that, there is quite a bit of enthusiasm for change there. I think that's a pretty volatile situation. Continue to keep an eye on.
A lot of graphic videos on X.
Lots.
A lot of you got to click through to see what you're going to see, and then when you see it, you're like, I probably shouldn't have.
Yeah. My bad. That was on me. You warned me. Yeah. Cuba. When's that going to fall?
Yeah, I mean, there's
so much going on.
I mean, Trump was on Hannity last night, and I watched the interview this morning, and he was basically hitting all of these. And I don't know, there's such a geopolitical hodgepodge that it's very difficult to filter through. I think the end result is America's
Back.
Yeah, I mean, certainly we're a bigger player than I think a lot of people thought we would be on the international stage. I think many were thinking we'd be a little bit more isolationist, kind of we're just going to manage our affairs, but that's clearly not the case. And I think that it's just a lot to filter through, and I think that part of that's playing through in premiums for gold. I'm curious as to what the actual impact is, because there's probably some sort of geopolitical impact on oil, but it might be negative. Because historically you have this geopolitical machinations and it increases the price of oil. Given the current circumstances, I wonder if it's a depressing impact. So, this is just something that we're watching all of this, but there really isn't a short-term investment implication. So we're not really going to give any advice or conclusions on that, other than that we're going to continue to watch it and react how we deem appropriate at the time.
And as Mamdani would say, we've been briefed on the situation.
Yes, we have.
Which means we've looked at Twitter.
Yes. I will say that I would encourage everyone to listen. Scott Besson did a long-form interview yesterday where he talked about a lot of different things, including, Minneapolis to start, but also he talked about Iran and how, basically the sanctions that were put in place pre-Obama were sucking the life out of Iran. Obama came in. He famously sent them a big pallet of actual cash. It kickstarted their nuclear program again. And the new sanctions have essentially put them on life support, and that the government there is out of money and they have no real recourse to get money, and that they're a failing institution. And now you've got these widespread protests. So he was pretty adamant that it was an economic situation that put Iran where it is now, and it's a dire situation for the current government, and how they get out of it he doesn't know. But it was really interesting and wide ranging. But of course, it wouldn't be a good Scott Besson interview where he didn't talk about drinking Dr. Pepper with construction workers at the gas station in the morning in Charleston. So he hit a lot of the hits.
And he made fun of Elizabeth Warren.
He did. They were saying that
he's so feisty, that one.
Well, we talked about yesterday the idea of how murky it's going to be to try and disallow corporations from buying real estate. And he, said, they're looking at different ways. What would legally define an aggregator, how they're going to do that. And the moderator asked, well, this is an opinion that Elizabeth Warren has. This is not a traditionally conservative viewpoint, which we talked about yesterday too. Yeah. And he was basically like, well, even idiots are right once in a while.
Bespectacled squirrels find an acorn.
That's what he said. Yeah, bespectacled squirrels find an acorn every once
in a
while.
So feisty.
Yeah. So
next week we get rolling with earnings. JP Morgan, Delta on Tuesday, Bank of America, Wells Fargo Wednesday. More financials reporting in the form of Goldman and BlackRock, Morgan Stanley. We'll hear from JB Hunt. We'll just be in it, man.
Yeah, one of those companies that was just mentioned is the one doing big layoffs.
Yeah, I'll let
Stay tuned.
I'll let you figure it out. College football semifinal last night. Klecker, how do we feel about the game? It was a good fourth quarter. That was fun.
Good game. It's a tough day to be an Ole Miss fan. Some controversy, a little bit of controversy over the last play there, but I don't know. I hate to say it, but Carson Beck played really good.
Yeah, it was pretty inspiring stuff from him. Only one interception.
No fumbles.
And it wasn't really his fault either.
Yeah, it really wasn't.
I would say that Miami was the better team. They had definitely had better players, but were much worse discipline.
Yeah.
So they tried to give the game away. But I think that if they had committed, 7 to 10 fewer penalties, that would have been a real runaway.
Yeah. Tonight, we've got Indiana, Oregon. I want to give the floor to Ben and TK because they're in agreement on this game. How's it going to go?
I like Cignetti. I like Indiana. I like his charisma.
That's what he's known for.
Cute as a button, that guy.
So much pizzazz with Cignetti.
And I cannot wait for Indiana to beat Oregon. I mean, Thomas and I were at the Battery last night along with Andrew, and there were Indiana fans all over.
They were all over.
The bars were packed. It was unbelievable.
I don't know if I saw a single Oregon fan.
Did you hit him with
Maybe
a
one.
little Hoosier daddy?
I will say
People love that.
Oregon they've got good players, they've got good coaches now. I would say that in the history of college football, and this is a family program, but I would say that the way they recruited to sort of start their program 20 years ago by, doing the stupid uniforms, I think is pretty candy ass. And I know this is, foul language for a family operation here, but I just don't think of them as a real college football program.
It is tough though, because it really works. Like
people like that, but I think that is corny. That's for young people.
My 7-year-old is like only plays with Oregon because he'll be like, well, I haven't used the silver jerseys yet.
I know.
When we're playing NCAA football, and I'm like, all right, well, that's fine.
It's a cheap gimmick. Real college football programs don't change their uniforms that much, in my opinion. But it is what it is. The world has changed quite a bit with NIL and all that garbage too.
I mean, it's going to be interesting. I don't know. I got to be honest. Just for the misery it would cause, Ben, I'm pulling for the Ducks. I just want to see some conflict.
I mean, if you like laundry, then Oregon is your team.
Yeah.
When I was a kid, we had one jersey.
Like, can you imagine the equipment storage room? I just imagine like it's so difficult to find matching socks, and then you're like, we got 85 different uniform combos. I mean, it's got to be a nightmare for those guys.
I mean, is it the only team that is basically run by a Fortune 500 company that also then pays another one for their mascot?
It's actually going to be great. Yeah, it's a great point. We've got Mark Cuban versus Phil Knight today.
And I would just remind you that you're riding with Mark Cuban.
Neither of those are cool people.
You're riding with Mark Cuban. All right.
He's Maddoing hard right now. I mean,
he looks just like her.
I mean, I've said this many times, but we all know your hair is not jet black, Mark Cuban. We know.
We're
71 years old.
Yeah.
Nobody has shoe polish black hair at that age.
It's all natural. All right. We'll wrap it up there. Thomas, glad to have you here. Hope the apartment hunting goes well. You'll be here a lot in April. Going to be carrying the show. We're going to stop doing it. It's just going to be you. So
Solo show.
Yep.
Somebody's got to do it.
Yeah. All right. We'll wrap it up here. Y'all have a great weekend.